Oat milk producer Oatly is about to become a public company. The company priced its initial public offering Wednesday night at $17 a share, which was at the high end of estimates. Oatly raised $1.43 billion in its IPO, a sum that will be used to expand capacity amid surging demand for its oat milk and other plant-based products. Let's welcome in Oatly's longtime CEO, Toni Petersson, for more on the market debut and outlook. Toni, good to see you this morning here. As I just mentioned, that is a large slug of money that you just raised from your IPO. How do you plan to allocate that capital?
Thank you so much for having me here today. No, we're super excited to be here. You know, the supply, it's to build out our production capacity across the 3 continents. I mean, this is a big year for us. Super happy to be sitting here with you, knowing that we have the new Ogden plant up and running as we speak with finished goods, and also the expansion in Holland, and as well as having the, very soon finalizing the last stages of the Singaporean plant and bringing a new plant up in China at the end of this year, right? But we're gonna build additional 3 factories up to 2023. So just to do that, in order to capture the demand that we are generating across the 3 continents.
And Toni, where is that demand coming from? You have a very interesting business model. Of course, a lot of consumers know you from coffee shops, but you also now have a big presence in grocery store channels. Given where we are in the pandemic, where is some of the strongest demand you're seeing?
We see it across the channels. So if you look at specialty coffee shops, it's actually higher than pre-COVID now. It's still recovering, right? But still over and higher than pre-COVID. Now this acceleration is about conversion. It's about people entering the space. We know that 40% of our growth is coming from new users who's never been in the space before, right? And if you look at the proposition of just make the best milk that is designed for humans and better for the planet, that's what we are. And those are the ones we're capturing here. And that is what we are driving.
Hey, it's Julie here. Thanks so much for being here. You know, something stuck out to me in your perspectives where you talk about not just the product, but how you present the product. You talk about tearing down the conventional corporate approach to brand building. We saw that in the Super Bowl ad when you were singing, of course, pretty famously. I don't know if you've got people walking up to you on the street and singing that song at you. You're probably sick of it by now. But it does illustrate, that a lot of your success is marketing. It's not just the product itself, it's marketing. So how much of the capital is going to be deployed to that? And how do you keep that hot streak going with sort of coming up with these sort of buzzy ideas for marketing?
No, that's a good question. By the way, I took one for the team there, right? Just so you understand that, Hey, listen. Yeah, one of the unique things is that we have a brand equity that really generates emotional connection with people and resilience versus competition. And we don't have marketing teams or departments or anything like that. We have a bunch of creative people doing amazing stuff. And this is really about us understanding people. Also be putting yourself out there and be transparent, not only about the good things you do, but be very open about things you don't do good as well. And also with a distinct and personal voice that we have, because it is created by us in-house. Now that's a huge strength, and now that's not going to change. And we're not going to put more in terms of how we're going to use the proceeds is going to be to build out the production capacity. Period. That's how we're going to use the money, and that's needed.
Toni, just picking up on one little thing you said, it's being honest about the things you do well and don't do well. As you become a public company, what do you want to focus on doing better? What are some of the lessons you learned before you came public that now you want to fix?
You know what? With scale, you can actually impact more. Your impact, it can be more positive as you scale. And that is what we are positioning ourselves from. When we build a new plants, it's a new generation of factories and plants where you incorporate sustainability from the very beginning, right? But we're just going to continue to do what we do. If you look at what we have done, being the first company that with the carbon label on all our products in Europe, being the first European company using a fleet of commercial trucks, and And this sustainability report, look at the research around agriculture, getting that more sustainable. So there are many things that we just should continue to do that we now can scale up.
Tony, it's Myles here. You guys had a really interesting chart at the beginning of your prospectus, looking at your market share, in some of your key markets. Obviously, dominating in Sweden, UK, Germany, but in the U.S., still almond milk is the main plant-based milk alternative. Most of the companies that we talk to, right, they have a huge U.S. market and they're looking to expand, in Europe and Asia. But you guys are kind of the inverse. I'm curious what you see as the market opportunity here in the U.S., what you think you can get to as a percent of that plant-based milk market.
Yeah, and that has to do with the fact that we only had one oat-based plant in Millville, and now we are establishing the factories in the U.S. And we're really excited about that. This is going to be a super dynamic year for us, and you're going to see the changes and in terms of market share and growth and all that. And remember one thing, probably if you've been looking for Oatly grocery trade, that it's usually out of stock, right? So a low fill rate and very low distribution, to be honest with you. Just 2020, 20% ACV. So meaning that the runway is incredible for us, just filling those gaps and continue from there. And specialty coffee shops still going to be a really important part of our success, and the relationships that we have with all the barista community, as well as Starbucks. So one of the unique things that, the multi-channel approach that we have, that we are successful in the multiple channels. So massive runway for us, especially in the US.
Tony, before we let you go, I just had a friend text me this morning. They're watching this, and they want to know, are you still going to be the pitchman in TV commercials for the brand? Or are you already planning your next Super Bowl ad?
Let's hope not, for everyone's sake, that I know. Not that I know of. I don't want it.
All right, well, fair enough. Well, maybe you'll change your mind. I'm sure we'd like to see another ad from the Oatly team. We'll leave it there. Oatly CEO Toni Petersson, good to see you. Congrats on the IPO today. Ford officially revealed its hotly anticipated first all-electric F-150 Wednesday night. The Lightning promises 10,000 pounds of towing capacity, over-the-air software updates, and the ability to power your home via backup power capability. Cool stuff. The extended range version boasts a 300-mile range on a charge, 563 horsepower, and a mid 4-second 0 to 60 time. Impressive stats. Joining us now for more on this release is Ford's president and CEO, Jim Farley. Jim, good to speak with you again here. A lot of focus this morning on the price, the starting price, under $40,000 for this truck. How did you get it under $40,000?
Scale. We built more than 1 million F-Series. It's been the #1 vehicle in the United States for over 4 decades. So we have great scale. And it allows us to do this kind of thing. We don't have to reuse seats. We have brake system. Everything is, we just have incredible scale. So it's a huge advantage for us. And we want to lead the electric revolution. We really want to transition ICE customers over to this technology. It's a really critical strategy for the company.
Jim, you have decades of loyal F-150 drivers, really folks that have grown up on this brand, and they've also grown up using gas-powered F-150s. Do you think this is a tough sell to them?
No, we have 20,000 orders this morning, 12 hours out after launching. What I found about full-size truck customers, when we went aluminum, they love saving 500 pounds. They have titanium fishing rods. They have multiple computers inside the vehicle. They're running their business inside. These truck customers are the most advanced, some of the most advanced technology people. We put a 15.5-inch screen in this vehicle. Because of it, we have over-the-air updates. They love all that technology. They love new technology. It's just a pickup truck. Shape kind of looks like it's, looked for a long time.
20,000 orders, Jim. That's impressive considering you just debuted this last night. When will you start delivering the new truck?
Spring of next year. So we have the Mach-E, the Mustang Mach-E right now, sold out for several months. 70% of the customers are new. That's on sale now. We have the E-Transit, the #1 van in the world and in the US. That goes on sale. That electric version goes on sale late this year in the United States. And then spring of next year, we launch the Lightning. We have a commercial version of Lightning because we're #1 in the commercial vehicle business here in the United States, almost 50% of that market. And we have a retail one They're slightly different. The commercial customers have a very different look at the electric market. The retail customers, they want all that performance, all that technology.
Jim, F-150s are they're known for their durability. People buy one and they still have the same one 20 to 25 years later. Will this truck have that same type of durability, given the fact that is, I guess, over-the-air software updates, battery-powered, you name it?
You know, it's a good question, and it's one of the reasons why Ford launching this vehicle this time is so important for our industry, because we are built Ford tough. We've done all the durability testing. You know, we've sunk the batteries in mud holes and run through all of our water tests. We do all the vibration testing. You know, we've been in this business for a decade of making these trucks, a century, and so we have the toughest testing of any brand, and people trust us at Ford. So the vehicle has to deliver on that durability you mentioned, and we are going to market this as built Ford tough, and we will have an exclusive version for commercial customers.
Jim, you're a car guy. You've been working on cars, since your '66 black Ford Mustang. How do you size up the competition in the electric truck space right now?
Well, I'd use a metaphor. You know, there's a lot of great soda companies out there, but there's only one Coke. Bring on the Mountain Dews, bring on the Pepsis, but there's only one F-150.
Well done there. You know, you had a chance to take the president around the track in the new Lightning. What'd you two talk about?
You know, that was totally unexpected. The Secret Service really didn't want him to get in the truck. When we did a static review, he got in for 10 minutes. And then in the middle of his speech, he said, "Look, I want to drive the truck." Everyone laughed. He said, "No, I'm serious." The Secret Service tapped me on the shoulder and said, "Jimmy, we need to get to the test track right now." We rushed over there at 90 miles an hour in the motorcade, and he jumped in the truck. He looked at me. I wanted to jump in with him, but the secret security people said no. And then the president said, "You know, what should I do, Jim?" I said, "Just step on the throttle." 0 to 64 seconds. And he had a big smile on his face. He was loving it. It looked like Top Gun. He had the Ray-Bans on. He was loving that moment.
No, you're a wise man, Jim. You don't want to mess with the United States Secret Service. But it is interesting to hear the debate on Capitol Hill right now. Some Republicans are hesitant to sign off on putting a large amount of investment in the EV space. Is this a make or break moment for this country?
I think it is. It really is. Because customers want this new technology. You got to think of these vehicles not as electric. Think of them as digital. They can get better every day, just like your phone. And so the value to customers with this technology, this vehicle can power your house for 3 days. Imagine if you're in Texas during that ice storm and you could have power for your house for 3 days. It's a big deal. The benefit is a digital product. It's not just electric. We can electrify job sites. You don't need a diesel generator. It's a different technology that it's just a better product. Look, I love our gas lineup of Mustangs and Broncos, and there'll be lots of customers who choose that. But this is just a better product for many customers. And I think it's time for us to be competitive. We got to be globally competitive in batteries. All the chip manufacturing, some of it has to come back to the US. This is a competitive issue for our country.
In our lifetimes, Jim, we're both still pretty young fellows here. Do you think Ford is no longer making gas-powered engines in our lifetime?
I don't know when it's going to come. I think if there's one product that we should all look at, it's F-Series. We have a hybrid version, we have a gas version, we have a diesel version, and now we have an electric version. And they're all really different. And the electric one is a digital product, as I said, does all these other things. So I think let's look at what happens a year from now. If this vehicle takes off, 20,000 orders in 12 hours, pretty good indication. I think we're into a different game. But we have a lot of commercial customers. We're the leaders, I said, that drive 600 miles a day. Electric probably isn't going to be the best duty cycle for them. If you're towing an RV that have become really popular in the pandemic, probably not, for a 1,000-mile trip. This is probably not the best technology for you. We have a hybrid truck that can do that and power your campsite. So I think let's make the customer choose that. But over time, definitely this is the future of our industry, a big part of it. And we're going to talk about that at our Capital Markets Day next week.
Yeah, no, a lot of folks are very interested in that Capital Markets Day. But Jim, before I let you go, 20,000 orders for the new F-150 Lightning. That is impressive stuff. Can you make that amount of trucks by spring next year, given where the semiconductor shortage is?
Look, we see the semiconductor shortage improving in the second half. We were disproportionately impacted, or some of us were, in the second quarter, which we think is a trough because of this Renesas Naka 3 facility in Japan. They're back up and running now. They had a fire, burn the whole place down, and they're back up and running. We're confident. But the demand has really outstripped even what we thought, 6 months ago. So I think we're going to be catching up to demand for a long time to come. As far as the Ford team, we make 1 million of these F-Series every year. Don't bet against the Ford team on manufacturing what we need.
Well, good to see Ford on the comeback trail, and good to see this launch of your first electric F-150. Ford CEO Jim Farley, good to see you. Stay safe. We'll talk to you soon.
Well, food delivery has been a very important piece of the way we've all been able to live our lives here in the pandemic, not just Uber Eats and DoorDash delivering you food from local restaurants, but also Goldbelly playing its part to help people who may have relocated, including yours truly, still access the favorite restaurants that they had in their old hometowns. That's exactly what Goldbelly does, pairing some cuisines. We're talking deep dish from Chicago getting shipped across the country. It saw its sales quadruple last year, more than quadruple last year. And joining us now for more on the details there is the founder and CEO of Goldbelly, Joe Ariel, joins us right now. And Joe, I mean, when we look at the demand out there for home, the feeling of home, to me, food's so important. But talk to me about the growth you saw in the pandemic as people were placing orders from all over.
Yeah, it's been a crazy time, Zack. I know like as a customer, like we've been a fast-growing startup for a long time, but this past year or so, obviously our trajectory changed, and two core reasons for that. Like one of those is if you're a customer, if you're a food lover, you miss foods from places you love, places you've grown up, and you can have them shipped in a box to your door, and it can be the epicenter of an experience that you can have with loved ones. It's been a really magical experience. And so on the customer side, north of 300% growth. And then on the food maker side, in retail, there's a word called omni-channel that everybody talks about in every industry except food. And what we've done is we've created an omni-channel future for local restaurants to be able to enter an e-commerce economy, shipping their food nationwide. And that's been magical and kept a lot of businesses afloat, and even some growing with their growing Goldbelly sales.
Yeah, it's awesome to see, particularly when, some restaurants are facing shutdowns from local customers, and broadening it out to people all over the U.S., I think, obviously would help in that. When you look at maybe how it's changed recently, though, because we keep talking about keeping some of the customers that would come to platforms like yours once we reopen, have you seen maybe a slowdown there? What's it look like now?
Yeah, I mean, first of all, as restaurant and food lovers, as travel lovers, we can't wait for things to open up and open up more, and that's exciting. Early on, as we're looking at the numbers, no real drop off. I think tailwinds, obviously, from stuff that happened in the past year or so. But at the end of the day, we've obtained more than 1 million new customers who have fallen in love with a new experience of getting food in a box that travels across the country for them. So I think we think the world's changed in a lot of ways, and certainly the food world, as we think of the future of food e-commerce, we think we've created a new category, which is food experiences that you love the most, where geography all of a sudden doesn't matter.
Yeah, and obviously there's no time like now when people haven't necessarily been going to these restaurants or been able to travel to go experience that. It's perfect time for something like Goldbelly, and maybe why my little brother gave me a Goldbelly gift card. I don't know. It was his gift idea. But when we look at maybe which regions of the U.S. deserve to be crowned some of the best food cities, I mean, what do you see on the platform in terms of demand from certain areas over others?
That's a question that varies on a month-by-month basis, but I think, the best data point would be we actually have city food subscriptions. And so, it might not be a surprise to many, but New York is the top seller in that batch just because there's so many great restaurants and brands. But, there's a couple of other big ones. And me personally, as a native New Yorker, but who really fell in love with food on a deeper level in the South, I look at a place like New Orleans, and there's a New Orleans food subscription. Some of the most creative and unique and interesting foods in the US, certainly New Orleans. And you may know, Zack, but we actually launched out of Y Combinator in San Francisco. And, San Francisco, obviously lots of talented food makers, iconic foods. And then you can't forget Chicago, where you were born, great food city as well. So a lot of great food cities. It all really depends on like what you love. But I think, you think of New York, San Francisco, Chicago, New Orleans, LA, and my adopted hometown of Nashville, Tennessee, another great one as well.
Yeah, can't leave that one off the list here. But I mean, when we talk about growth and where this goes, it's interesting to see companies that had enjoyed big booms in the pandemic. I'm thinking Airbnb, who's kind of extending into experiences here. I know you guys raised a Series C, $100 million funding round not too long ago. When you think about where Goldbelly goes next, what are maybe the dreams to extend the platform, maybe beyond the US or beyond just ordering food? What else do you see there in kind of what you guys do best?
Yeah, so there's like 300,000 independent restaurants in the US. We work with about 850 right now. And we just feel that every town has a hometown favorite, a food that you love, a food maker that the town takes pride in. And so we want to connect all those dots and really empower people to connect with the people, the places, the foods, the memories that are meaningful to them. So I think, as we grow, we feel like there's so much room in the US. But I will say your question's timing is interesting because just a few minutes ago, we actually launched our first international chef out of Argentina, a chef named Francis Melman, who you may have seen on Chef's Table, who does these legendary asado kits on these beautiful fire pits with hanging meats and vegetables and empanadas. And so we're actually shipping his food anywhere in the US, literally as of a few minutes ago.
Good God. All right. We got to leave it there. They're telling me to wrap, but yeah, I mean, we could go on for days. You're talking to a guy who's got a Meatstagram account. You studied abroad in Argentina too, but Joe, Ariel, appreciate you coming on here. Goldbelly founder and CEO. Congrats on the growth, man. Be well. Welcome back to Yahoo Finance Live. We're seeing a major rebound in Bitcoin, Ether, and the other cryptocurrencies here today after yesterday's massive sell-off. Of course, off those lows, we have seen Ether come back by about 20%. In what was the worst selling we've seen in a bit here. Still, though, up close to about 300% year to date when you look at Ether. And we had one guest on not too long ago talking about an $8,000 to $10,000 price target. And even with those jitters we saw yesterday, she is sticking by that and joining us now to dig into why. For more on that, welcome back into the show, Megan Kaspar, Magnetic Managing Director and co-founder, joining us once again. And Megan, I guess it's a good refresher to have for people who might be newer to crypto that these moves happen even in a bull cycle. But talk to me about why you're still bullish and still see 8,000 to 10,000 by the end of the year.
Yeah, Zach, we just experienced our first market sort of capitulation and a correction. In 2017, we had a similar experience, but we experienced two of them with 40% drops. So, this asset class is very volatile. From an annual perspective, though, it's one of it's a lesser volatile asset. But from day to day and week to week, we do experience quite a bit of volatility.
The other interesting thing, too, that we were talking about, is JP Morgan was highlighting this in a recent note in terms of the institutional investment action there. Net inflow stayed positive for Ether, but dipped negative for Bitcoin. And some were talking about maybe Bitcoin seeing funds that would have flown to them going to gold or Ether. What do you make of that? Because one of your theses or thesis points in getting to 8,000 to 10,000 was about institutional demand for sustainable projects. Does that maybe support your case even more now?
Well, I think that the flows that we saw flow out yesterday weren't necessarily institution. It was majority retail investors. So the institutions, Wells Fargo yesterday announced that they are going to provide qualified investors with the access to actively traded crypto products. And I think we'll see a proliferation of more of that. And this will also add to the value of Ethereum and the price increase that we'll see. But again, the fundamentals and the technicals are all showing same indicators, and we're on track with the product rollout for Ethereum and the improvements that'll come with the chain. And those use cases are going to also come along with that.
Putting all those things together, I know short-term volatility is especially hard to predict here when we talk about where we're at in this cycle, but Fundstrat was out last night talking about it looks like they assigned a better than 50% chance in terms of this being kind of the bottom for Bitcoin. Obviously, there's some technical levels here, but in your estimation, based on what you're hearing from kind of investors active in the space, how sure would you be about that sounding right?
I think the $30,000 support line that we hit on Tuesday at 5 a.m. Pacific was probably the low point that we'll see for Bitcoin this year. We're also seeing a lot of buy support. Even though the fear indicators and index numbers are very low, fear and greed index, a lot of new customers are entering and new holders and investors are coming into the space. We saw an increase of new wallets yesterday for both Bitcoin and Ethereum. So this is a good sign, an indicator that we have a very resilient asset class.
Yeah, we were talking yesterday with CoinShares about Bitcoin's dominance and how that may have been maybe a signal of what could have happened here in this sell-off, as you see kind of altcoins catching a big boost so far this year, DeFi projects, the like. But there's one that I know you were kind of focused in on when we talk about Ethereum and the way that network's being built out. When we talk about building on top of Ethereum, these layer 2 kind of projects out there. One of them, Polygon, formerly known as Matic, added to Coinbase not too long ago for trading as well. Talk to me about what projects like those mean for the space when it comes to adoption in DeFi and other things utilizing that technology.
Well, Polygon is a layer 2 on top of Ethereum, so it's going to allow for faster and better scalability, lower fees, so transaction costs, no matter what you're using the chain for, movement in and out of the chain will be a lot more efficient and lower fees. Polygon is up 1,000% for the year, and there are dozens of projects, including Mocha, which is a crypto digital art museum building on Polygon. So we're going to see quite a few new projects and use cases coming into the ecosystem and into what we call the metaverse.
We're getting deep into the crypto woods here as we talk more about these kind of further down along the line projects. But I mean, when you look at that had been the story ahead of yesterday's sell-off, was kind of the rally that a lot of those altcoins had seen for some futuristic projects and future iterations on what we've seen so far. But for the back half of the year, as much attention as maybe an $8,000 price call on Ether might get, are you still anticipating more excitement, exuberance in maybe those smaller projects, the altcoins that we've seen lead the way so far in 2021?
Yeah, I think we're going to see a large pop towards the end of next year of more use cases, specifically around DeFi and decentralized finance. Yesterday a lot of the centralized exchanges were shutting down, so the volatility or different factors in the space can allow that to happen. But we won't see that with decentralized finance, and I think that's a big driver of decentralized networks.
It's been interesting to see kind of everybody going back and forth for why this is such an important piece of the picture here when we talk about markets and the volatility as well. Exciting to always see that happen. Hopefully everyone stayed calm out there. But Magnetic Managing Director and Co-founder Megan Kaspar, always love having you on. Appreciate you taking the time.
Welcome back. It is Mental Health Awareness Month, and we want to discuss the impact that the pandemic has had on the mental state of American workers. We're joined now by Bill Rodgers, labor economist and a professor at Rutgers University. So, Professor, we were recently chatting with the CEO of BetterUp, who said that American workers were, and I'm going to quote him here, he said that they were languishing, which he described as a general blah feeling. I'm curious to know, is that it, or is something more serious happening here where American workers aren't just feeling blah, but are actually feeling feelings of clinical anxiety, of depression, and other mental health issues?
Yeah. Thank you for having me to talk about this really important issue. My co-authors, we looked at the U.S. Census's pulse data or pulse survey, and prior to the pandemic, the roughly about 6 to 7% of the population said that they had anxiety or they were self-reported as being depressed. But when you look at the pulse data, and truly in the midst of the pandemic, the rates have just self-reported rates have jumped to about 25 to 30%. I mean, the good news is since the $1.9 trillion has been starting to get out into the economy, and I think people also sending messages that help is on the way with the recovery and with continued support. Some of those rates have fallen, but they're still in excess of 20%. And I have some colleagues who think, since these are self-reported, these actually could be even lower. So this is not about lazy Americans or Americans being blasé. I mean, this is, for most Americans, this is probably the toughest 1 year that many have had in their whole lifetime.
I think you are absolutely right, Professor Rodgers. And I know that your survey also found that, look, I don't think anxiety and depression are discriminatory. I think they're equal opportunity issues. But by and large, you're seeing this impact more severely low-income communities, Black and brown communities, and younger people. Were you able to glean anything from that? And why do we think that's happening?
Yeah, well, prior to the pandemic, people of color, women, right, those who face pay differentials, pay disadvantages, such as women continuing to earn 20, 25% less than men, or that Blacks, Latinos earn substantially less than their white counterparts. That creates economic stress. That creates challenges when how am I going to meet my monthly expenses? How am I going to meet my child care bills? And when you're chronically going from week to week, month to month, having to really figure that out, how to juggle, how to prioritize, that creates anxiety, that creates stress. And some of my colleagues, Sandy Darity at UNC, Chapel Hill, Duke, he's been studying this for a long time about, you see, particularly Blacks and other minorities, and particularly intersect that with income. Right? They've always been facing stress, and so this, as you said, this pandemic was an equal opportunity stress creator. It moved up the income scale, out to the suburbs, up the educational ladder too. So, but the good news, as I said, we are starting to see some improvements.
All right, so Professor, for those who do have jobs, for those employers that are out there that recognize that burnout, depression, anxiety, none of this is good for worker productivity, what can they do? Is it a matter of starting to increase some of those salaries so that people feel a little bit more appreciated financially for the work that they're putting in? Is it company happy hours? What can be done on an employer level to fix some of this?
Yeah, no, that's a great question. I've been working with a colleague, Jim Cisneros, about reentry or return to office work. And number one, as you said, increasing wages, and I think that will also address some of the concerns that that people don't want to go back, that they're wanting to use their unemployment insurance checks. They prefer using those to meet their bills. But if there really is truly a worker shortage, let's see people increase wages. Let's have the federal minimum wage increase to $15 an hour. But then the human resource people and the talent management people are going to also have to do some, if I might say, reboarding. Right? That many people have been out of work, have been out of the office for months and months, and even in those short periods of time, people's soft skills will have deteriorated or sort of fallen off, and so there will have to be a greater amount of compassion and understanding with regards to bringing people back and showing sensitivity, because we still aren't out of the woods yet, fully out of the woods yet. I mean, many moms and dads are facing challenges and the anxiety created around childcare. Many schools have reopened, but they're not open full time, and so they're still trying to juggle these responsibilities is still anxiety creating. So one, improved compensation and wages, and company, that's two. But then also probably doing some onboarding types of activities and letting people grieve and letting people talk about how their last year has been.
And Professor, what about on a federal level, from the Biden administration? What are some practical things you'd like to see happen there? Because when you look at the federal relief and the recovery efforts that have been put forth so far, not a lot of it is including things like mental health and help for depression and anxiety.
Exactly. The American Recovery Plan had some items in it, but it was more about making health insurance more affordable because people's incomes were gotten whacked or they lost their jobs. But in the report, we talk about is 3 to 4 things. One is we need to continue to have improved education around mental health. It's been a positive thing when we're seeing Michael Phelps and other celebrities talking about their mental health challenges because that helps to remove the still existing stigma associated with mental health. And that relates to then also having enforcing what are called mental health parity laws. And that is basically treating mental health benefits the same as regular medical care benefits. And then a third thing is really invest in incentives that will also diversify the workforce of mental health employees. There is a relationship that others have found that people feel more comfortable, and particularly in these sensitive areas, possibly talking with those who look like them, more like them. And then I think the other piece is, as that does in light of what's happened with George Floyd and the shining the light on structural racism, that has to be addressed as we continue to move forward. So, unfortunately, there's no silver bullet. But we all have to be in this together because that's what's happened over the last year. We've been in this together and we need to support one another.
No silver bullet, but a nice highlight to all the employers that might be watching. Paying your employees a little bit more can go a long way to help them out. Bill Rodgers, labor economist, Rutgers University professor, thanks so much for joining us.
Yusef Salaam was just 15 years old back in 1989 when he and 4 other minors were falsely accused of the brutal rape of a Central Park jogger. He was incarcerated for 7 years before being released, and his conviction was ultimately overturned in 2002. For the first time, Yusef is telling his story in his memoir titled Better, Not Bitter, Living on Purpose in the Pursuit of Racial Justice. And we are happy to have Yusef Salaam joining us right now. Yusef, welcome. I found this book to be very powerful and inspirational. Your conviction was overturned nearly 20 years ago. Why write this book and why now?
I find that, first of all, thank you for having me. But I find that my memoir shows up right on time. Here we are in the midst of a pandemic, in the midst of two pandemics in the Black and brown community, where we have COVID-19 and we also have the oppression that's been going on, where the clarion call through George Floyd's murder happened. And I think that telling the story of the criminal justice system and how it links from the past to the present to the future and where we need to go is really important. My story is not just the story of what happened to me, but it's the story of what's been happening to us as a people. And it's also the story of triumph. It's the story of how do we increase our light in this world full of darkness so that we can make a way forward and we can ultimately vibrate at higher levels so that the system itself transforms into a system that is inclusive of the kaleidoscope of the human family.
So to that point then, Yusef, going back just to the title of the book, Better, Not Bitter, I think so many Black Americans talk often about being bitter, about loving a country that they don't feel loves them back. As you mentioned, we're coming up on the 1-year anniversary of the murder of George Floyd, and there was justice done in that case. But so much justice is still delayed and denied for so many other families of Black men and Black women. So how can we not stay bitter and get better?
We have to take the lemons that life gave us and make lemonade. It was Dr. Maya Angelou who said it best. She said, "You should be angry, but you must not be bitter." She said, "Bitterness is like a cancer. It eats upon the host. It doesn't do anything to the object of its displeasure." So use that anger, she told us. You write it, you dance it, you march it, you do everything about it. And then she said you talk it. Never stop talking it. One of the most interesting things about being upset is that whoever caused you to be upset, if we think about Newton's third law of motion, for every action is an equal and opposite reaction. Oftentimes in the black and brown community, the camera turns on at the reaction, and no one asks about what caused this action to happen in the first place. And so I think that it's really important for us to understand that part of the war that we've been fighting is a war really of our minds. If they can take your mind and move it over here or move it over there, wherever your mind goes, your body follows. So it's important for us to look at situations and circumstances that we find ourselves in and try to be the type of people that are resilient. Knock me down 9 times, I'll get up 10 is a mantra that Cardi B gave us. And I think that mantra is a mantra for our lives. We have to become the survivors of the fittest in order to really, truly liberate ourselves in this world.
That's well said. And I know throughout the book, you talk about focusing on the things you can control, right? And the power of your own thoughts. Salam, Yusuf, I'd like to get your take on what happened this past week in the Senate, where some Democrats passed a bill that would automatically erase some criminal convictions. The idea being that if you paid your time, you shouldn't have to wear it like a scarlet letter when you get out, and you get a clean slate, so to speak. Some critics are saying that shouldn't apply to all crimes, that employers and neighborhoods and neighbors should know your criminal record. Where do you stand on that?
I think that when a person who's done a crime has paid for their crime, they should be fully restored back to society. You know, Michael Moore did a film some years back called Where to Invade Next, and here we are, America being a very young nation. Many people who've come to this country have places that they've come from that have criminal justice systems, that have prison industrial complexes. And in those spaces, we find people are treated humanely, people are treated fairly. It gives the person the opportunity to think about better choices in the future, not to say, let me build a better mousetrap. When you penalize people and constantly push them into the corner, especially the margins of life, you cause a situation that is very destructive. People who are able to change reality for themselves, to become their own alchemists, they don't have to worry about that. But we have to make sure that as a society, we do our best to ensure that people have the best opportunity to fully participate in life, liberty, and the pursuit of happiness. We don't want to wake up like I did at 15 to what I call the American nightmare. We want to be able to appreciate the American dream.
Let's switch gears here and talk about the jobs market, because the jobless claims number that we got out this morning, better than expected, hitting its lowest level that we've seen since the start of the pandemic. So here to talk a little bit more about this and what she is seeing in terms of job opportunities right now, we want to talk to Irina Novoselsky. She is the CEO of Career Builder. And Irina, it's great to have you. When you look at the trend that we've seen over the last few weeks, at least in the jobless claims number, they certainly are heading in the right direction. What are you seeing just in terms of the number of job openings and then also the ability for employers to fill those positions?
I mean, that second part of what you said, Shauna, is so critical. There's a hiring pandemic that is the opposite of what we just lived through in 2020. And that is that companies cannot find enough talent to fill their open jobs. And it's ironic because when you look at the unemployment rates, they're still double pre-COVID levels. However, when you look at what's happening on the candidate supply, it's completely different than what's happening before. And for example, there's over 200% increase in job posting. And yet we're at an all-time low of candidates actually looking for jobs. We're at a 48-year low. And so what's happening is it's driving intense competition for every single job. We're seeing waitresses. There's over 22 jobs open for every single waitress. On software developers, we're seeing almost 30 jobs open for every single software developer. It is a really tough environment for companies to hire right now.
So one of the things the platform does, though, and in your words, you remove the friction points, right, between applicant and potential employer. What are those friction points, and how do you make it much better?
Well, Adam, we're actually doing this really exciting partnership with Workday. Today, when candidates show up to job sites, one of the things they do is they click on a job. And then they sometimes get routed to different pages. And it can take 10 to 15 different steps for a candidate to apply. And in this kind of environment, companies can't have a 90% candidate drop off. Candidates are too valuable. So we partnered with Workday. We're the first in the space to get the type of integration that allows a one-click apply. So candidates can click on a job and they immediately go into the company's ATS system, Workday in this case, and get connected to the job instantly. It eliminates the drop off, it eliminates the lengthy processes and the multiple steps, and it allows one active solution to clients right now that are really struggling to fill open jobs.
Irina, what do you blame or what do you think is the cause of this? I guess is a better way to phrase it. Is it the enhanced unemployment benefits? I'm talking about this mismatch that we're seeing just in terms of the number of Americans that are unemployed, yet we still have millions of job openings. Is it a skills gap? Is it the enhanced unemployment benefits? Is it a combination of that? I mean, from your view, what do you think is the biggest driver of this?
It's all three. It's less on the unemployment side. So, for example, unemployment's helping in the sense that most states have increased unemployment benefits. So when you annualize the minimum wage, you're basically getting anywhere from $30,000 a year to $45,000 a year annualized, depending on the state that you live in, which is definitely impacting those jobs that fit into those salary ranges. However, that's not all of the jobs. One of the things that we're seeing a decline in is switchers, which make up actually the majority of the open role fillings, right? It's people who have a job that are looking to switch roles. And we're seeing delay there for two main reasons. One, 70% of schools are still in a hybrid model in some way. And so parents are taking a second look on should they be switching jobs? Should they be moving companies? And the second thing, Shauna, you said it, is the skills gap. It existed before, but if we think about what COVID has done, it's materially accelerated the dynamics of so many different industries. And so the type of talent that we're now looking to fill doesn't exist today. And our companies are seeing that in that there's 20, 30 open jobs for every single candidate. And it's just creating this very unique situation that we would not have expected post-pandemic.
When we talk about that, from personal experience regarding relatives, I know there's a shortage in, for instance, home health and personal care aides. You see it actually at some of the nursing homes and assisted living facilities, and it's one of the areas you highlight as need. Now, I don't want to say these are low-skilled jobs because in a lot of these cases, these people are providing medical service. So have you seen more people coming to websites like yours, trying to find those positions, but also to get the best salary they can because they are in demand?
They are in demand. I mean, you mentioned nurses. There are 43 open jobs for every single nurse. And so we're seeing a few different dynamics. One is people are trying to figure out the salary arbitrage of a certain job, depending on the skill set that they have. And two, one of the things and you mentioned, while there's certain levels of nurses that require higher level certifications, there are a lot entry level roles that you can broaden your skill set and get a certification for pretty quickly, or even across various different openings and customer service jobs, in mortgage application roles and approvers. One of the things that we're seeing is that not only are candidates applying more to broader roles, there's less of them, but they're going more wide for the ones that are applying. We're actually seeing the challenge on the other side where companies now have to be more open to taking somebody who doesn't have 100% of the experience set. That just doesn't exist today in this kind of demand supply environment. And so companies are having to take 80% of the skill set, 70% of the skill set, but have some of the skill set might not have the exact experience. And so we're really coaching our clients on how do you move from that? Have they done it to can they do it? And it's now relevant more than ever.
Irina Novoselsky, CEO of Career Builder. Thanks.